Hey guys, welcome in this new video. I hope that all of you are doing great. So in today's video, I'm going to share with you guys what I currently think of the stock market, explain a bit more where we are currently when it comes to this, and essentially what I'm expecting for the future. So I made a video like that at the beginning of the year where I was explaining that I had a pretty positive view on the stock market, and I wanted to update you guys with my view now that we completed the first quarter of the year and share with you what I'm expecting for the future. So as always, I hope you are excited for this video. If you are, please leave a like. I would really appreciate it. And again, make sure that you are subscribed to the channel. It really helps me grow the channel and I would just really appreciate it. Okay guys, so let's get right into it. So before the video, I actually did some work on different charts really to go as straightforward as possible and really share with you guys as much value. Okay, so let's get into it. So first of all, in the last couple of weeks, right, and I would say even in the last couple of months, the main thing that happened was the Silicon Valley Bank failure. Okay, so we had a bankruptcy, which is a pretty important thing, and in response to that, we saw the market going down quite a lot right here. So this is the S&P 500, which is one of the main stock market index. Okay, and then after that, when this situation happened, there were a lot of uncertainties and a lot of risks on the market. Okay, and what I think is really important to understand is simply that, you know, in the banking industry, right, in the banking sector, the risk is that when a bank goes bankrupt, it can actually lead other banks to go bankrupt because it's all linked together. Okay, so it's actually a pretty big risk, and that's the reason why the market went down quite a lot. But then after that, we saw the Fed and the US government actually come to save the situation, right? So they did inject some money into the system, they protected the deposits and stuff like that, and overall this gave a pretty good boost, as we can see right here, for the US stock market. Okay, and so essentially my takeaway, right, if we look at all of this, as I said, there is, yes, a risk that this could continue, but for now it seems that, you know, it doesn't look too bad and that there is some stability that is coming back. Okay, and so that is actually a pretty positive thing for the stock market. And as we stand right now, I am still bullish on the stock market. Okay, so I had a positive view at the beginning of the year for stocks, and I still have a positive view. So I'm long on the stock market. I have money that is invested in the stock market, and I think that it's going to go higher. Okay, and this is a very not popular view, I think, right? If you look at other videos on YouTube, or if you read articles and stuff like that, a lot of people are still talking about the market that is going to crash, that, you know, we have massive risk and that it's not going well and stuff like that. But as far as I can see, I don't really have this opinion right now. And you know, guys, in my trading, right, I've been trading for 8 years, doing it full time for 4 years. In my trading, I like to have a contrarian view most of the time to what most people think. So if everyone is talking about the market crashing, most of the time I've noticed that it doesn't crash and that it actually goes up. And so I like to have an opposite view, right, of most people when it comes to the markets. So essentially that's what happened. And the thing is that when we have a lot of risk, okay, on the market, just like we had right here, and when the market crashes, if it's not able to even break the first level, which was this level right here, and then it already reverses, right? So if the market cannot go lower on such uncertainty, then it kind of shows that it's going to take a lot more for the market to crash. And so at the current time being, I don't see that happening. Again, it's not impossible, but in terms of probabilities, right, that's how we need to think as a trader. I don't think that it's the most probable scenario that it completely reverses, and that's the reason why I'm still in the trade on the stock market. Okay, now if I show you guys another chart, which is really important. Okay, so this chart right here, I've already explained the chart in some details in another video, but I'll go over it again with you guys just to make sure. Okay, so first of all, if we remove this and this, so what we have here on the chart, okay, is a line where we see essentially the US 10-year yield minus the US 2-year yield. Okay, and essentially, as we can see, right, I have the zero line on the chart, and most of the time this actually plays above the zero line. Okay, so it shows that when you have yields, right, for 10 year, okay, it's actually longer, and it tends to provide a better return than the 2 year, okay. So people are going to have something back if they take something longer than shorter, okay. And it makes sense because they invest for a longer period of time, so the reward is bigger, okay. I mean, it's pretty logical when you think about it. But in some situations, okay, just like we've seen right here, and more recently here, the curve can invert, okay. So it can actually flip and we go under zero, and now that means that people are getting more rewarded to actually hold the 2 year than the 10 year. And so this situation, historically speaking, has led multiple times to a recession, okay. So it's kind of a early indicator, a early sign that we could potentially get into a recession, okay. And again, that is definitely possible. I'm not excluding this possibility, right? When I say that I'm positive for the stock market, it's for the next couple of weeks and for the next couple of months. But ultimately, if we eventually get into a recession and if the economy really starts to not perform well, then yes, I think we could get a bigger market correction. But I don't think that this is coming right now. And so that is really the point of this video, okay? So essentially, right, we have this inversion, which is already quite interesting. But then if we really look, okay, into something that is even more important in my opinion, which is simply the relationship, okay, between the stock market and the interest rates, okay. So in orange I have the S&P, and in red I have the interest rates, okay. And so if we zoom in, for example, in 2000, okay, so right here, so if we look at the orange line, okay, we can see that the US stock market went down quite a lot, okay. So this was a market crash, okay. And so what we can see is that before the market crash, if we look at the red line right here, we can see that interest rates were going up, and then after that we had a pause, and it's only after that, after the pause, multiple months later, that we actually started to crash. But when interest rates were going up, the markets were still going up as well, okay. And so what is important to understand is that most of the time when we have a crash, it's when we have interest rates that are going up quite a lot, but then it takes months and months and months for these increases to really start to hit the real economy. And that is when that happens that we have a market crash, and not before, okay. So that is something that is extremely important to understand. So we had the market crash right here, and then if we look at 2008, which was the last big market crash, same thing happened, okay. So look at the red lines, okay, big increase in terms of interest rates, and then a pause, right? If we look at the orange line, which is the stock market, we were still going up, okay. And it's only when everything started to get hit, right, and when it really started to feel itself in the economy, that we had the crash right after that. And so if we look at what we have right now, and that is one of the main reasons why I'm still bullish on the stock market, well, interest rates have been going up. We are expecting the Fed to pause raising rates very soon, okay. So eventually the curve is going to look like this. But we know that historically speaking, when they hike interest rate and when we have a pause, it's not at that point again that we have a market crash, okay. It's later on when everything starts to get slow and when the economy really gets hit that they start to cut interest rate, and that the market starts to go down as well, okay. So that is something really important, and so that's the reason why I'm expecting some movement to the upside right here for the next couple of weeks and for the next couple of months. But I'm not expecting the market to make a crazy big move to the upside, okay, and just continue on within this trend, okay. Ultimately, I think at some point we will probably have a bigger correction. I just don't think that it's coming right now. And of course, timing is everything when it comes to trading, okay. You need to have a view, but you also need to time your trades, okay. I mean, that's the role of a trader, okay. So anyway, so that's the idea right here for the stock market, okay. And so that's pretty important to understand that this is really just a historical perspective on that, okay. So that's one of the charts that I wanted to share with you guys. And then after that, if you look at this chart right here, so this is more a technical view for a longer term chart, okay. So this goes back all the way 2008, 2009, okay, when we had the last market crash. And so if we look a bit more with these lines, right, we can see that these trend lines have been very, very well respected. So we have this kind of movement right to the upside that seems to follow along here. And then here we had the pandemic, then we had a big bull market, and now since the beginning of 2022 we've been in this correction, right? But as you guys can see, we are not in a situation where it totally crashes and where we get a crazy move to the downside, right? It's just making a correction, and we've been doing up and down for months and months, okay, as we can see. And so again, that's really important to understand that when we have such negative news recently on the market and that it doesn't crashes, it actually gives more of a positive view to the market, okay? And this is something that I've been thinking about for quite a long time, and that I actually talk about in the weekly review of our coaching program, okay? So for those of you guys who don't know, right, inside of our coaching program with all of our students, one of the things that we do are weekly review videos. And essentially, right, every single week I record a video where I show all my trades, all my analysis, everything that I do on the markets, right? I show this every single week. And so in the last couple of weeks, right, where when we were around these levels right here, and that there were still a lot of fear and a lot of uncertainties with the banking sector, I was essentially explaining that if it doesn't go down right now and if we don't break a big level, then ultimately it's going to have more of a positive view, and I would expect the market to go higher, and that's exactly what we've done so far, okay? So I'm going to share with you guys a little clip right here of the weekly review where I was talking about that, and you'll see more of my thought processes right here. And so my point is that sometimes when there's a lot of noise, a lot of things going on, you need to take a bigger perspective to understand like what's overall happening. And here overall, well, nothing much really has been happening for these specific markets, right? Now, of course, for these specific banks that were hit and stuff like that, of course, right, a lot of things happen and it's a pretty big situation. But my point is that for the overall markets, at least for now, right, like, I mean, it's not that bad. And that's probably because of what the Fed and what the governments did to actually help them. If they didn't do this, most likely, I think we would have broken these lows and we would have continued lower, right? But because of the fact that the Fed once again came in to save the markets, well, the markets actually finished higher for the S&P on this week. And so that was actually one of the most meaningful things that happened during the week, in my opinion. And I'm going to talk about this idea a bit more as well today. But essentially, right, if we don't look at the chart, right, and I just tell you guys that we had bank failures, we had massive fears on the market, a lot of uncertainty, right? You would say, oh, well, Anthony, the market is most likely very down, right? It's probably breaking lows and stuff like that, right? And that would be kind of the logical way to look at it. But then we look at the market in itself, and I mean, it's fine for now, right? And so my point is that when we have massive negative news and that the market is not even able to fall on this, then you need to ask yourself the question, what would make the market fall? And the answer is, I don't really know for now, right? And so that actually gives me a pretty positive view on the market, right? And I know that this is very, very against what most people are saying, okay? But you guys know me, right? I like sometimes to go against the crowd. And with my experience, it actually works pretty well, okay? Remember the beginning of the year, right? You can go back in the weekly reviews and you've seen it, you will see it, right? At the beginning of the year, which was around here, everyone was calling for a market crash to start the year. Everyone was really negative. People were extremely bearish, right? And I was like, I don't think the market is going to drop right now. I think the market is actually going to break the trend line and make a move to the upside. And that's exactly what we had, right? So sometimes going against the crowd is actually the right thing to do, even if it doesn't really seem logical and even if a lot of people will disagree with you, right? Now, again, it doesn't necessarily mean that it's totally going up right now, in the sense that if we actually get something even more meaningful, if we get more bank failures, of course it could go down, right? I'm not saying that it's totally from the upside from here and that everything is beautiful, right? That's not the point. But the point is that if it doesn't get worse and that the market keeps on going higher and break back above some levels, then I think that there is a higher probability for the upside ultimately, okay? So yeah, that was just to show you guys how essentially I was thinking of this. And so if we look at inflation, right, this is also something that is pretty important. So the Fed actually did raise interest rates because inflation was too high and they needed to control inflation. This is one of their main priorities, we can see that inflation has been going down very nicely. Now, we are still far from their objective of inflation at 2%, right? So there is still some work to do here. Now, with interest rates being high and making a pause, it could also put pressure on that, right? So it's not bad on this side. But what is important, and I think that the big risk for inflation is that we have China that is reopening, okay? And China is a big consumer of commodities, okay? And so if we see China reopening and the demand for commodities increasing quite a lot, then we could see natural resources going higher. And if that happens, this could lead to higher inflation. And the worst possible outcome, right, is that if the Fed raises interest rates, we start to see the economy not performing well, and then inflation also comes back because of China reopening and the Fed is forced to hike even more. That would be like a total disaster, and that would be a really bad situation. But as I said, right now we're not there. We don't know if that will happen or not, but there is definitely a risk, because if we look at commodities in general, we can see that, you know, gold is going higher, silver as well, platinum doesn't look bad. If we look at energy, well, here we have copper, right? But if you look at energy, so oil, mainly oil is one of the main commodities to look at. It's also making a nice move right here. So there is definitely a risk overall, right, for these trades. And I think it's important to understand that if all of these commodities keep on going higher in the next couple of weeks and the next couple of months, as I said, this could lead to higher inflation and this could cause a risk to the market. Now, if we go back to this chart right here, okay, so just the S&P in itself. So essentially, right, to keep it simple, what I'm looking at right now, technically speaking, right, so we have a big level around here. Okay, so a big area, let me just put this a bit lighter, right? So we have a big area around here. Of course, we need to break this level, right? That's number one, okay? But if we, let's say, make a correction here and then we break, then I think that there is a pretty good probability that we go all the way to 4,300. And who knows, maybe 4,500, 4,600, right? With these levels right here, I don't think that it's impossible, right? And again, it's a totally opposite view than what most people are talking about, but I really do think that this is a possibility. Of course, I could be wrong, right? And if I'm wrong, I mean, you know, it's part of the game, right? It's part of trading. And I would say that I will hold this view unless something changes, right? Unless we see something really big happening in the world, or if we break the levels here, so 3,800, right? So all of these lows, right? So if we go down and we break these levels, right? Now at this point, we will be under the trend line, under this level, under the moving averages. And this is where it will look a lot more risky and where we could probably look at the lows right here around 3,500 and maybe even lower, right? But as I said, as long as we are above this 3,800 level, I'm not looking at this right now. And I think that the market could probably go higher if we are able, as I said, to hold above this level. So yeah, that's about it. That's what I wanted to share with you guys in this video. I hope that it was clear, right? I really try to go as straight to the point as I can and just give you as much value as possible. But that's my view right now of the stock market. So if you guys have any questions, feel free to drop them in the comment section below. I'll try to answer all of you guys and just provide you even more value. If you like the video, please, as I said, leave it a like, share it around as well. I think a lot of people probably need to hear this as to why the market is not always necessarily going to crash, okay? And just have a more objective view, right? And essentially waiting for confirmations. I hope you guys enjoyed the video, and on that, take care, trade with care, manage your money well, and I will see you on my next video.